And welcome to the VSA Capital Tech and Transitional Energy Podcast. Phil, it's me and Phil today, the dream team. We're both in the office. It's amazing. How are you doing, Phil?
Very well, thank you, Andrew, and always delighted to be here.
Yeah, well, I have been running around a lot recently, and actually, yesterday we both actually were together, but not in the office, but down in Chiswick, which is obviously where I live, but at the Mellow investor event, which was actually really good, wasn't it?
I thought it was super. Good number of companies were there, some excellent speakers, including your good self, and Andy Boss from Schroders was talking, companies presenting, and lots of investors there. So it was good to see.
You know what? I feel an absolute idiot. I spend my life telling companies when they present not to have too many slides, keep it short, plenty of time for questions. I had 30 minutes to speak, and I ran out of time. I don't listen to my own advice. What a fool I am. But if anybody listening to this happened to listen to my talk yesterday, about 100 people, believe it or not, were listening. Quite why, I have no idea. Feel free to contact me directly, and I'm happy to take questions. But the key to it all to me is name me one company, Phil, you met down at Mellow that you thought that's really interesting. Or do you want to keep it to yourself so that nobody knows?
Yeah, I'm going to keep it secret.
Oh, you're just tempting listeners, aren't you? Anyway, look, let's turn to some of the sort of news and things that have been going on this week. And I guess actually on the sort of big picture, we won't mention Partygate because, of course, the government's trying to cover that all up with the windfall tax. Now, I have a personal view. I think windfall taxes are completely wrong. It's just unfair because companies have good times and bad times. They pay, when they have a good time, they pay a huge amount of tax to the government. They pay a huge amount of dividend or something to their shareholders. They reinvest it. A windfall tax is just fundamentally wrong. And my own belief is that if Rishi Sunak, as our Chancellor, is putting a windfall tax onto the oil companies, then actually I know a pair of people who also made supernormal profits recently and made about £750 million. It's called Mr. and Mrs. Sunak. And my view is if he imposes a windfall tax on the oil companies, he should actually impose a windfall tax on himself of £500 million. And that maybe would be fair. So Rishi, just in case you're listening to this podcast, get your wallet out, your checkbook, and write a check for £500 million to the UK government, and that will help everybody's with their bills.
That's an excellent suggestion, and I couldn't agree with you more on your overall view of that. And how on earth can companies plan ahead with their, huge capital expenditure budgets over years when they don't know what is going to come out in terms of their tax?
It is actually totally absurd. But on that note, it's worth commenting. One of the stocks, which also reported this week, by the way, that they've talked a little bit about, should we say, paying windfall tax, because they didn't just do it for the oil and gas. They then said, look, the energy company should do it too, because they've been making supernormal profits. And it was quite interesting. SSE, which is a stock that I've owned for some time, we've talked a lot about on this podcast. And they had results yesterday, actually. They look pretty good. But what I found really fascinating, they pointed out that they contributed £5.8 billion to UK GDP in a year. They support over 45,000 jobs in the UK. Actually, that's what it's all about. All right. These companies actually are helping the country anyway. Don't go and mess it all up. Actually, the results from SSE were pretty good. And of course, with the full year dividend they're paying, you've got a 5% yield or so at today's price. The only problem I would say is I know that when I bought them, I set myself a target price of £20. So when they reached £19.20, I was thinking, oh, blimey, have I got to get out now? Then Rishi came along, not the bloody price. They're bouncing up a little bit. Obviously, you've got Elliott Advisors there. They are doing all the right things. And I do have this hugely strong belief that actually what Shell should do is buy SSE. It would make a fantastic acquisition for them. So I'm probably going to hold on to my stock for the time being. But it is sort of up near to my target price. So that is just one slight cautionary word. I don't know if you had a look at the figures or have got any views, Phil?
I looked at the figures briefly as we were out travelling a lot yesterday, but I think my thing, because I've been looking at this as well, I mean, it is yielding 5%. And if you sit right now where we are in the markets looking 5 years out on something for an investment right now, then it's a really, I still think it's a, longer term, it's a very interesting one, really interesting play. And as you say, there is that, maybe it does become a target, who knows, but it's good quality business.
I mean, the whole offshore wind farm industry is absolutely booming, and there's a lot of people looking at it from all sorts of different angles. I mean, it's interesting. Obviously, one of the big things that's been happening is Siemens Energy are taking over Siemens Gamesa Renewable Energy. They already owned about 60 or 70% of it or something, but they're taking it out completely. Of course, Siemens Gamesa Renewable Energy are huge manufacturers of wind turbines and the actual thing that they put in place. Yeah. And you just wonder what Siemens Energy will now get up to there. Will they actually start to move down into a more vertically integrated channel and that sort of thing, and actually try and, just building wind turbines maybe isn't the most profitable of businesses, particularly as obviously there's a limit to what you can do unless you're actually building more wind farms. It could be quite interesting. I think that's a really interesting move by Siemens Energy. And I do see potentially some sort of, upstream and downstream plays coming out of that. I don't know if you have a view on that, but
yeah, we haven't kind of seen that before with big industrials, whereby they're manufacturing the equipment, but also have got the potential for making money out of the end use of the equipment, and the opportunity for margins and margin growth from doing that could be a lot higher than just developing and selling the hardware itself. It's it's a theme. It's a theme to watch. That, I think.
The other big company to watch that's doing a little bit of this as well is, I don't know if you looked at what Lockheed Martin are doing. They actually moved into long duration energy storage, but unfortunately they completely messed it up and got the wrong product that isn't working. But they clearly have. I mean, we obviously think of Lockheed Martin as an aircraft manufacturer. Yeah. But they clearly have huge ambitions in long duration energy storage. They just don't know how to do it. Going back to wind farms, though, by the way, I don't know if you saw, obviously you wrote that wonderful note. It was wonderful on picks and shovels and how to play the energy transition thing with the little companies that aren't directly energy transition but involved in it. I see that on the wind farm side, Tecmar just won a very big contract for offshore wind cabling in the US.
Yes, I did see that. Yeah, good for them.
We like Tecmar. They're just based too far bloody north for me to go and visit.
Oh my! Well, I don't know what. I'm not going to comment on that, Andrew. But no, good for them. And the US, offshore US is a very good place to be, and a good foot in the door for them.
Yeah. No, I think they're doing all the right things. Now, look, I'll tell you what, the other one that we probably need to have a little bit of a chat about that's been big news this week is the Johnson Matthey had their results today. But also we had news that they had sold off basically, well, we knew they were closing down their battery division, which they'd spent 140 million on. No one wanted to buy it as a division, but what's kind of happened is that somebody's basically bought the rump for basically nothing. And so got what I describe as a 140 million pound business for nothing. And of course, that's another company that we talk about a lot on this podcast, which is Nano One Technology, run by a guy called Dan Blondal, who's an absolute genius when it comes to batteries. I've actually been to Vancouver, visited his plant, seen how he's doing everything. And actually, yesterday after he announced this deal, his share price was up 46%. Shows what an amazing deal he got. And then Johnson Matthey, of course, had their figures this morning. I don't know if you had a chance to look through them. I mean, let's hear your view before I give you my view.
Oh, look, they've got a new chief exec in, so clearly things aren't going to happen as he, puts his print on the business. But the financial results, do you know what? I haven't got them in front of me, but from memory, were a bit mixed. They've got quite big exposure to the automotive markets, and they two big challenges there. Obviously, semiconductors continue to restrain automotive output, but it's a sort of twin thing. one, new auto numbers are going to be reduced for their catalytic technology, but second hand, it was interesting to see the second hand markets had a bit of an impact as well, because second hand, not as many sort of second hand cars are getting recycled and stuff, so that's its own sort of impact. But I think I thought it was a bit of a mixed bag of figures.
It was, you know what, it was a mixed bag. When I started reading it, they seemed to be saying lots of, upbeat stuff.
Yeah.
Dividend was up 10% to 77p, but then I kept reading it. And I was starting to read things like, for 2022-23, they said we are facing a period of greater political and economic uncertainty with a combination of factors that may affect the year ahead. I'm starting to go, hang on a second, hang on, alarm bells ringing. Then he goes on, our performance for the full year will continue to correlate closely to levels of auto production, as you said, and precious metals. And here's the issue also with hydrogen. Hydrogen is it's very difficult to make money actually out of hydrogen. It's taking longer than certainly most governments would like, because they love going hydrogen because it's such a great story. And then at the very end, they sort of started saying things like, consequently, when you have a consequently in a statement, then no, it's not going to be good news. Consequently, we expect a larger operating loss in 2023 in hydrogen.
Yeah.
As a result, whilst visibility is low and the outcome for the year remains uncertain, we currently expect operating performance to be in the lower half of the consensus range. Do you know what? I mean, clearly the new CEO, bit of kitchen sinking, you got to expect that. The market was disappointed today, though. Stock's off, what is it, 165? It's off today. And that's after it had a pretty good sort of run up, actually, from about 1822. So it's now sitting around 21.8, wasn't it? Johnson Matthey's the sort of stock I would love to say I want to buy it. But I'll tell you what, it ain't going anywhere in the next 6 months. So unfortunately, you probably don't need it.
Yeah,
bit of a shame.
It is, of course it is. But this will be one what you take a close look at. Say, I'm going to buy now and have it for the next 4 or 5 years. I mean, what was interesting and a difference here is the SSE announcement was the speed of the bounce back. People thought about it, thought about the potential impact, and thought, why not be all that bad? Yeah, two different tales there for sure.
Yeah, I'm not sure I would buy it quite yet. Actually, I think you've got a bit of time.
Yeah.
I mean, clearly if you look at the three top holders, it's BlackRock with 10%, Schroders with 5.7%, and Threadneedle with 5%. Those sort of people, they have to just sit on positions because it's so difficult for them to trade them. But I think, for a small person, a high net worth, no, I would wait and watch. Sorry, it's just the way it is. Now, talking of hydrogen, by the way, don't know if you saw, I think it was this morning actually, that Airbus are going to build a new research facility which will have a good look at hydrogen at Filton in Bristol, because they're trying to hit this zero something by everybody's trying to hit a zero something, aren't they? Just please don't make it VSA. We want to zero profits by 2035. That is not my view. But they want to, they're building it for 2035, which I think I find that interesting actually, because actually the UK is definitely developing quite a strong skill set in hydrogen, and that's why they're basing it at Filton.
They also build don't they build the wings for the Airbus down there?
Yeah, they do. Yeah.
No, that's good law. That's good news for our engineering as well. And the nice thing about these is when you see multinationals doing this kind of thing in this country, and it's leading edge development, all those engineers will get trained up, and they could become the companies of the future as well. So that's nice. That's good news, Andrew. That's good.
Yeah, no, it was nice to see, wasn't it? Actually, whilst talking about big investments, might as well carry on talking on a theme. Why not? Whilst we've got a theme going, always quite good. I saw that, and I don't know if you saw it. It was a bit of a funny little one. And I need to. I don't know if you know, Stellantis and Samsung, right, have jointly announced, I think it was yesterday, that they're going to build a $2.5 billion battery plant in the US. They're going to build it in Indiana.
Hey, I'm not seeing that one. Whoa.
Yeah, they're doing it in sort of conjunction with Chrysler, to help Chrysler move obviously from combustion engine to electricity. They hope to open it in about 2025, It's quite interesting. I mean, it really is, I think, the first move by Asian companies building a major battery plant in the US. And I mention this really because it's something I've been looking at quite a lot. People may remember that I, about 2 months ago, went out to Hot Springs, Arizona, and a lot of that was connected with American battery plants and this sort of thing. There is a real move in America at the moment that you've got to be an American company with American manufacturing, selling to American customers. And if you are, the American government will give you a huge, great grant and pretty much pay for everything. And I think we are going to see more and more of this, people actually saying, right, we're going to build production and capability in America. And this was another sign of it, if you saw me. It's a really key point. I think, again, I'm going to bring in one of our favorite companies, of course. By the way, for all listeners, I apologize. The stock has been performing really badly recently, which I think is unfair, but that's markets for you. But Invinity Energy Systems, they were at the Mellow event yesterday. Obviously, that's why I was in Hot Springs, Arkansas. And, here's a company. They announced they've appointed EAS advisors the other day to help them in America. This is a company that's probably going to start to make itself look very American. For all we know, they could end up with American production, selling to American companies. Well, they'll be selling to the California Energy Commission, because California Energy Commission has made it absolutely clear it wants vast amounts of non-lithium energy storage, and that means it's got to be vanadium flow. And if they do all of that, you would think that maybe the US government might give them a loan of $100 million to build it all. But who knows? What would I know?
We will see. But it's interesting how this move is happening, Andrew, for because I can remember, like, the 80s, it was all about multinationals putting their production as close to the customer as they could. And that's why the Japanese came over, the big Japanese manufacturers, and into Europe electronics plants. But now this is that the States and what's happening in the US, and the fact that Samsung have moved, as a huge battery manufacturer, and obviously good for Invinity and what they're doing over there. But that is a very interesting move. Wow.
Yeah, caught my eye. Eye. Anyway, right. What else have we got going on, Phil? We probably there's not been that many results of this.
Well, go on. I'll rattle through. Right, quickly. Still on the theme of batteries. Gresham House Energy Storage Fund.
Oh yeah.
GRID is a ticker on this one, and they have announced a fundraise, raising a further £150 million. Which they placed at 145p per share. Now, this is a fund, and their NAV in March was 132p per share. And they've given expectations on their NAV, but they've got a big installed base of batteries, and they have said due diligence well underway for 647 megawatts of capacity in the UK and Ireland. But that is another way of getting exposure to the battery side of things, energy storage in the UK.
Well, I mean, it tells you, doesn't it, just how strong energy storage is. But I think, as most people know, look, these funds are pretty good. Basically, they pretty much do as they say on the tin. But I am concerned that, and I really do need to try and find this out once and for all, that what they're not putting into their council balance sheet or whatever is provisions for decommissioning. Mm-hmm. Trying to get rid of a lithium-ion battery is very expensive, and I'm not convinced that they've allowed for that, and therefore at some stage they may suddenly get a bloody great hit. We really must try and find out if I'm correct here, but I mean, I've been saying it for a while, and no one has come to me and said, actually, you know what, Andrew, you're completely wrong, which tends to make me think that I'm right.
Well, we need to find out. I'll tell you what, you look at the decommissioning costs on nuclear reactors, and decommissioning costs on any kind of big installed energy source is an important factor. So yeah, we're interested to find that out, Andrew.
If anybody listening knows the answer, do please give me a buzz and tell me.
There we are. So storage. There have been a few tech results, Andrew. Do you want to just wrap?
Yeah, go for it.
Yeah, we had full year results from Calnex. So there's CLX's ticker, 140 million market cap, and they produce test instrumentation and solutions for, they say, network synchronization, network emulation. Well, what's that all about? This is all about testing telecoms networks. So you're trying to, by emulating, repeating the signals and what might be seen in the field. Very important for telecommunications equipment makers. And they have been seeing strong growth in sales. And a lot of this has been driven by, on 5G, but also general growth in internet infrastructure as we're all using more and more bandwidth up. The revenues were up 23%, which was all very good, and their adjusted profits before tax were up 18% to 6 million, closing cash of 15 million. So an increase their customer numbers, but does seem to be going well, and they had a positive market outlook as well. So I thought that was a good story, but there's been quite a few. These are interesting. These are IT services companies, and what do? Well, I mean, IT services companies, they can do all sorts of things. They can provide lots and lots of different bits of, if you increase the amount of software that you're using as a business, they will source best-in-breed software from all the software providers. They'll provide you with cloud services, IT equipment, security, IT security, and Softcat is one of those companies, SCTS, that's 2.8 billion, and they had their third quarter results to April, and they were saying this was a trading update. They've performed well during the period, delivering double-digit year-on-year growth in revenue, gross profit, and operating profit. And they said that the supply situation, so this will be for a lot of computing and IT-related equipment, remains challenging but consistent. So not necessarily getting any worse. But what's quite interesting about it, Andrew, is this is all business spend, right, on IT services, increasing digitalization, increasing productivity, but it's business spend related, and they're still seeing that reasonably positive. And another one in the space was Bytes Technology, BYIT, and they are their full year results. And again, this is IT services, cloud services, security, software licensing, etc. And then their full year to February, they'd seen their revenues up 14% to 450 million. Very interesting, something we always look at. This was discussed yesterday at the investor show. Their gross margins increased from just under 23% to 24%. We always look out for gross margins, of course, because that's an indication of pricing power and how they're managing, increases in their own cost base. And their earnings were up by 60%. Well, you need to look at how the profits are made up, but their earnings have grown. But again, they had quite a decent, outlook for their business. That's IT services. Another one was Knos as well, which we've covered as well. It's KNOS. And they have their full year results. The shares were up 18% on a day, and they've been falling. They were been down about 30% during this year. But again, they saw their revenue growth of 29%. Their profits were up only by about 3%, but they said that they've been investing quite heavily in operations and taking on more staff. And their revenue split 41% commercial, 37% public sector, and 22% healthcare. But the commercial revenues, this caught me, commercial revenues were up over 50% during the period. So again, spend still seems to be continuing when it comes to sort of overall tech and tech services for business to improve business productivity.
It's interesting that, but I mean, you do wonder. I mean, obviously, tech you need. It's sort of something you can't stop spending on to a certain extent. But as it's going to get tough as we go through the year for businesses. The question is, will they actually start to say, actually, you know what, we might not spend quite so much? I don't know. I don't know the answer. Don't know if you ever feel.
Well, we're not seeing it. We're not seeing it yet.
No, the question is, will we see it?
Well, that's no. Because I'm just thinking, because when Lehman's occurred, the crash, though I think there was quite a degree of, it was quite a sudden thing. It was relatively quick, wasn't it? And very quickly, companies turned around and cut. Not just operating expenditure and things like this, but capital expenditure. And we're not seeing that, as you say, yet. But yes, of course it could.
I think in the autumn we may well start to see certainly CapEx going down.
Yeah.
Yeah.
Yeah,
Well, I mean, what's good is I'll tell you what I picked up, which is not it's not IT spend like that, and it has lots of little bits of business. Shall we say? It's RS Group. Do you look at that one?
no, go on.
I caught you out. I love it when I catch you out.
You
Cool.
did. You
Right.
got
So RS Group had some figures this week, and actually they said their trading continues to be very strong in the first 7 weeks of the year as well. So things are still going pretty well. They've got a good inventory availability, which is robust. Average order value has increased further, which obviously helps. They they're a distributor of basic electronic products and things like that. They did sort of say that it's all looking pretty positive going forward, except for Asia Pacific. But they then said that actually that's only less than 2% of their turnover, so they weren't really too worried about it. But yeah, and again, another if anything, the one thing we can say is the sectors that we're looking at and talking about here are the sectors that are still performing pretty well.
Yeah, they are. And RS, I know from flipping industry days. What's good about RS, Andrew, is they do an awful lot. They do a lot of components that are quite specialised or hard to get. And it's when the customers will want it in smaller volumes, like they're developing new kit, and you only need a few of them because you're doing the developments. They're not selling millions of specific types like Samsung will do its memory chips or processor chips. So they're quite. That's interesting that they're seeing spend continuing, but I'm kind of surprised because there's a lot of component shortages still out there, and RS are the guys that will be able to get a hold of them in when you're buying in smaller volumes. So, that's good.
Okay. All right. Anything else you've got?
Quickly, Centralnik have results. These were CNIC is the ticker. It's 400 million market cap, and their quarterly results to March end. And they're very much internet website related. So they specialize in sales of globally of domain names, websites. They do hosting, monetized domains, and managing domain names is a massively important thing, because if you lose your domain names to competitors or whatever, it's it's part of your IP. So they do an awful lot that's domain related, but also element of advertising related. But they had their quarterly revenues were up 80. Well, I was more interested in what's happening at the bottom line, actually. The revenues were up 86%, which I think, I don't know if that was all organic, but their bottom line operating profit was was up 10 million to 18.5 million. And they moved, it had been making a small loss, I think, but it looks like they moved into a net profit as well. So it was it was just looking at where market spend is occurring, really, and what areas of tech. And clearly where you're trying to manage, websites and domains are a key part of IP for any company. But they're certainly seeing spend continuing in that area.
Very good.
Yeah, and only other quick one from me. Well, two quick ones. Frontier IP, one of our clients. And they have those stakes in technology companies, and they earn it by providing services to those tech companies, helping them developing their business, commercialization services. And they have, I think, 19 companies in their portfolio. And Frontier IP, FIP is the ticker. And one of their portfolio companies, Cambridge Raman Imaging, has raised £1 million. And their imaging tech is going to be used for diagnostics in cancer treatment. But Frontier's we like Frontier IP. Obviously, it is a client of ours, but their portfolio tech companies are mainly spin out from leading UK universities, including Cambridge University. So they have that. And then finally, for me, Judges Scientific, JDG. It's 480 million market cap, and I've known this company for a long time. It's a classic portfolio company of scientific instrumentation, and they acquire and they build and they serve. Their instruments go into the education markets, into research development institutes, big scientific community spend on their equipment and manufacturers. And they acquired a company called Geotech, and this is in non-destructive analysis of geological cores in mining, something you will know all about, Andrew. And they acquired that for £80 million. But Judges is one that's well worth looking at, because these types of companies. One have got spread of end customer spend, particularly R&D related spend, which is more sticky than some capital spend, but also eventually in time, we've seen time and again this type of company get acquired by bigger US multinational portfolio companies.
Yeah, a big target. We love one of them. Right, that's probably enough today. Now, look, I'm feeling kind. You know I'm a very kind boss. So I think I'll let you have next Thursday off, Phil.
That's so generous of you, Andrew. Thank you very much.
It is a bank holiday, so it's only fair, really, isn't it? I'm actually quite a nice boss, though, really. Look, it is obviously Jubilee bank holiday, celebrating the Queen's 70 years on the throne next weekend. So the Thursday, Friday, Saturday, Sunday. Hopefully everybody's going to have a really nice long weekend with lovely weather, street parties galore. I'm the chairman of my street party. I am never being the chairman of another street party. This is the third time I've done it. And I don't need the additional work. But there you go. It'll all be fun and games on the day. I'm sure I'll drink far too much. If anybody's got anything they want to talk about, any comments about what we said, please let us know, or introduce us to new companies. Or if you're a company and you've listened to this and you'd like us to talk about you, we'll only charge you thousands of pounds to do it. No, we won't. We'd be delighted to talk to you. Please come and talk to us. We always like to talk to new companies. We find the whole space fascinating, and we just want to be able to talk to people about it. So on that note, Phil, enjoy the rest of this week and your weekend, and we'll speak again in a fortnight.
I look forward to catching up then. Have a good break, Andrew.